97,000, 98,000 is sort of where I thought we would be 3 years ago. So the real question is, will the institutions enter the game? And I think you see some of the endowments starting to do that. We know some of the sovereign wealth funds in the Middle East are quietly doing that. And so I think it's going to be a very good year for Bitcoin.
If the government actually starts to print money to buy Bitcoin, the dollar is going to go down in terms of everything. And by the way, it's going to be massively inflationary in dollar terms. In Bitcoin terms, inflation won't be that bad. In fact, it'll continue to be deflationary.
One of the most critical factors for Bitcoin's long-term success is institutional adoption. Scaramucci believes that institutional players are gradually entering the market. Some endowments have started investing in Bitcoin, and sovereign wealth funds, particularly in the Middle East, are quietly allocating capital to the asset. He sees this as a promising sign that Bitcoin is transitioning from a speculative asset to a globally recognized store of value. The real question, according to Scaramucci, is whether institutions will fully embrace Bitcoin. While some are still hesitant, the landscape is shifting. As more major financial players allocate capital to Bitcoin, it will drive liquidity, stability, and further price appreciation.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think that Bitcoin now is representing where prices should have been in 2022. And said differently, if you look at the November Bitcoin futures approval, just studying administrative law, the spot ETF should have been approved sometime in the first quarter of 2022. So all of that delay caused a lot of that price damage. And so I see it here as the community seeing itself getting propitious, decent, middle-of-the-road regulation. And if you look at the people that the Trump administration has put into those positions, I think you end up getting that. And so 97,000, 98,000 is sort of where I thought we would be 3 years ago. So the real question is, will the institutions enter the game? And I think you see some of the endowments starting to do that. We know some of the sovereign wealth funds in the Middle East are quietly doing that. And so I think it's going to be a very good year for Bitcoin. Well, I think it'll likely happen at a small level. I think David Sachs has been very smart to delay it. I think the executive order showed good judgment because you want to get the buy-in from the Republicans and the Democrats, not just one party. You'd hate to see a strategic reserve going into place, Republicans lose power, and then the Democrats pull the rug on Bitcoin and take it out of the strategic reserve. I think you need to get buy-in on both sides. I think it was very smart of David Sachs to make sure that there was a 6-month debate and 6-month analysis of this. But I do think you get something. Remember, we have 27 other things in our strategic reserve. It's not just gold and oil. There's trace minerals and other things that the country reserves. I think this is an asset that the country will want to own. Solana is faster. It has lower gas fees. And I think it's the one that's going to win the race, if you will, in terms of going into the tokenization world. If Larry Fink is right and we end up tokenizing stocks and bonds, I think Solana would probably be a more obvious choice.
You know, what we're ultimately talking here is about the dollar kind of going away and about Bitcoin kind of replacing the dollar. And, you know, there are a lot of ways that can happen. It can happen organically and slowly. It can happen in a rush and messy if everybody runs to the exit from the dollar. It could happen with a monetary reset. You know, I think, you know, partly depending upon how aggressively the government goes at buying Bitcoin, that will set the tone for what the dollar value is. I mean, if the government actually starts to print money to buy Bitcoin, the dollar is going to go down in terms of everything. And by the way, it's going to be massively inflationary in dollar terms. In Bitcoin terms, inflation won't be that bad. In fact, it'll continue to be deflationary. But, you know, they could at some point say, yeah, the government stands ready to buy and sell Bitcoin at this price. The problem is nobody knows what quote unquote this price is. And, you know, so they've kind of got to let the market discover it. But, you know, all I can say as an investment manager is that I'm very comfortable being in the asset that they can't print. And how we get from here to that asset being the underlying numeraire or base layer of money in the world, I don't know. I'm not smart enough to, nobody knows. I mean, there's just too many moving pieces, right? But, and for, for all I know, I mean, I've talked to Jeff about this as well. I mean, I think there's some possibility that the world and even the US government will try to do a gold reset first, and I mean, they should do it on Bitcoin, but they'll try for gold first because it's historically been around and all that. And it would, I could see that. And, if they have the 261 million ounces that they claim to have, which I don't think they have, but if they had that, if they were reset gold at, $75,000 an ounce and say the government stands ready to buy and sell gold at $75,000 an ounce, and we're not going to print any more money, and we're going to shut down the Federal Reserve. I mean, one of the things I did in the book, because a lot of people say, hey, you criticize the system, propose an alternative. There is an alternative in the book. There's a chapter called Policy Response. And I actually wrote out, a hypothetical speech that a president could give. I'm not going to spoil it. I don't want you to buy the book, but that talks about what they might want to do to try and solve this. Because I honestly believe that trying to do a monetary reset like Roosevelt did could be fairer and less messy to all parties involved than kind of letting the thing naturally just kind of unwind. Which I think, might lead to really high inflation, arguably even hyperinflation. I hate to say that word, but it could, because, if we got, blue team, red team keep fighting. So right now, red team's in charge. I don't think they're going to hyperinflate because they're going to try and be somewhat, restrained on spending. They'll make a good effort with Doge. I mean, they can't do what they say they're going to do. They say they're going to cut $2 trillion. They can't do that. But they're going to make a good effort. And, what was I going to say? I lost my train of thought. They are going to, in my view, if blue team comes back in. So, but let's say this is a tough 4 years, and at the end of the 4 years, the voters, are all. Because the voters are. I think what the voters are doing now, and what I've noticed they're doing is they just throw the bums out. Nobody gets reelected. Everybody is very unhappy with the condition of the country, and so at every election, it just goes, to the other side. And so, if in 4 years Trump hasn't made some meaningful progress on a lot of this stuff, he's going to get thrown out, and the next administration is going to be blue. And that's going to have, Andrew Yang with universal basic income. It's going to have Stephanie Kelton as the Treasury Secretary. She's the modern monetary theory guru. And they're going to print so much money, your eyes are going to bleed. And that could take you right to hyperinflation. So, you just don't really know. It's very hard to see every chess move a few years out. But I do know that the math is bearing down on them. And as a result of the math, they really don't have a choice but whether to inflate. They could also reset. But between those two things, or they could stop inflating. But if they do that, we're going to see 1929. This whole debt structure is going to come down. It's going to be, just an incredible mess. It's going to make 2008 look calm. And as we all know, those of us who were in the financial markets in 2008, that was like the scariest financial event in my lifetime. Everybody thought literally the ATMs would stop working and the whole world was going to fail. I didn't believe that, but that's what they convinced Congress and got them to pass TARP as a result of that. So
Scaramucci speculates that the U.S. government is already taking steps to accumulate Bitcoin. While it remains unclear whether they have sold any of their holdings, he believes they will likely stop selling and start buying, potentially through the Exchange Stabilization Fund. This move would signal Bitcoin's importance in future monetary policy and could drive its price significantly higher. Legislative support, such as the Lummis-Gillibrand bill, could further reinforce Bitcoin's role in national reserves. While there is debate about whether the bill has enough votes to pass, its approval would be a significant milestone in Bitcoin's integration into the financial system.
I think it's a possibility. I think he's got some things in the back of his head that could take us that way. I just don't know. My gut is that they will, based on what I've heard, I think they're going to stop selling. I don't know if Biden sold any of the 200,000 roughly that they have, but if they didn't sell any, I think they're going to hang on to what they have. So that's a good start. And then I suspect they will start buying. I don't know if the Lummis bill will pass. I've heard both sides of that. Whether, I've heard they've got the votes. I've heard there's no way they don't have the votes. That would be huge if it passed. I hope it does. My gut is they can buy out of the Exchange Stabilization Fund, and they probably will, just as a signaling mechanism. I think they want higher gold prices and higher Bitcoin prices because they want to devalue the dollar. What you've heard Vance and Trump and Bissett say is that the strong dollar is what hollowed out our manufacturing base and has really hurt America. and we need to have a weaker dollar. And so, okay, fine. How do you get a weaker dollar? Well, you market lower against hard money stuff like gold and Bitcoin. The thing that they don't talk about, that those of us in the financial world know, is that if they have a weaker dollar, that's going to be inflationary. I mean, it's, okay, so the dollar doesn't buy as much. Well, guess what? Shit's going to cost more. So, and that is the fundamental problem. I mean, when you've got your debt growing faster than GDP, the way to get out of that is through financial repression, which is to have inflation. I mean, we had the same thing right after World War II, and they had, yield curve control. And so they were able to grow their way out of that hole by holding rates down. And of course, all the bondholders got completely screwed in that scenario. And I think that's what will happen in this scenario as well. So yeah, I think it's entirely possible that they will be buying Bitcoin. And I mean, if they go at it really hard, I mean, it's very clear to me that they will want a lower dollar. Mathematically, they have to have a lower dollar, or else we're headed for, a meltdown. A complete meltdown. And the problem with the lower dollar is that'll be inflationary, and if it gets too low, then you get into a crack up boom and hyperinflation. So they're trying to walk a very thin line between those two extremes. And one of the things I did say in another podcast, I should repeat it here, is I think it's, Trump is aware, and they're smart enough to know that they've only got 4 years. And really kind of only 2 years. They might, lose the Senate. And so if they're going to break some glass, they got to do it quick and hope that the glass gets repaired before the voters get another shot at them, right? And this reminds me of 1980 when Reagan was elected, and Volcker had rates really high, and Reagan took a lot of steps that weren't particularly popular in the first couple of years. Everyone's like, Jesus, this economy really sucks. But then kind of in 83 and 84, things got going, and Reagan won overwhelmingly, as a result of that. And so, if Trump's going to face, I mean, if he wants JD Vance to have a chance at winning in 4 years, they got to break whatever's wrong now, take the pain now, solve it, and hopefully it'll be better in 4 years, rather than the other way around. Because if something breaks now, he can still say, hey, this is Biden. You can't blame me. I've been here 2 months.
Scaramucci underscores that a weaker dollar driven by Bitcoin and gold appreciation is a likely policy goal. Policymakers have acknowledged that a strong dollar has hollowed out U.S. manufacturing and weakened economic competitiveness. Devaluing the dollar would address these issues, but at the cost of inflation. Managing this balance will be a delicate task for policymakers. He references historical precedents, such as post-World War II yield curve control, where the government suppressed interest rates to inflate away debt. Please like and subscribe.